Let's dive into what's happening in the oil market right now, because it's more than just a price chart crashing. This goes straight to the heart of geopolitics, inflation, and Trump's 2025 strategy. So here's where we are. After President Trump announced sweeping reciprocal tariffs, global markets have been in turmoil. And crude oil? It's taken a beating. West Texas Intermediate, WTI, dropped below $60 a barrel. That's a 17% slide from just April 2nd, and the lowest level we've seen since the post-COVID recovery in 2021. But here's what's important. This isn't just a short-term market blip. This is about intentional policy direction. Trump has repeatedly tied the goal of lower energy prices to two core priorities. First, bringing down inflation, and second, using cheap oil as a geopolitical weapon, potentially to pressure Russia and end the war in Ukraine. That's not speculations, it's strategy. This goal isn't just Trump's. It's backed by top administration officials. Treasury Secretary Scott Bessent, Energy Secretary Chris Wright, and Trump's key economic advisors like Peter Navarro and Stephen Miran are all aligned on this. In fact, Miran, who's now chairing the Council of Economic Advisors, has made it clear lower inflation is essential to unlocking a deeper Fed rate-cutting cycle. And the most powerful tool to get there? Lower oil prices. Now here's the catch. WTI sitting below $60 isn't just a number. At this level, U.S. shale producers are basically underwater. Based on Q1 2025 data, the break-even price for new wells is about $65 a barrel. So every dollar below that is a warning signal. If prices stay here, new drilling stops. And if drilling stops, U.S. oil production falls fast. And that puts the Trump administration in a tricky spot. Because yes, low oil prices help fight inflation. But they also risk undermining one of Trump's core policy legacies, U.S. energy dominance. You can't be the world's oil leader if your rigs go offline. But let's not forget the other big player in this story, OPEC+. Since April, OPEC+ began gradually increasing supply again. But honestly, it's not that aggressive. The group's planned monthly increases total about 140,000 barrels per day. If you annualize it, that's just around 500,000 barrels a day added in 2025, less than 0.5% of global demand. And if prices keep crashing, you can bet they'll stop the increases cold or even reverse them. History tells us that OPEC+ tends to act when Brent crude gets close to $60. Right now, Brent's hovering around $64, so the pressure is already on. If we dip just a little lower, a production cut becomes not just possible, but likely. And that's where this gets interesting. In the Trump administration's playbook, particularly Stephen Miran's, a period of industry disruption is acceptable if it helps get crude to $50 or below. Remember the 2014 shale versus OPEC price war? That's the kind of reset they're willing to trigger again. In Miran's own words, lower energy prices are favorable for equities and economic growth, even if they cause short-term pain for producers. Let that sink in. A deliberate push to restructure the global trade system includes enduring short-term shocks to achieve lower costs, and they're okay with that. They know the oil market is volatile. They're banking on it. So where does this leave us? If demand doesn't collapse and we don't get a full-blown recession, oil at $59 is unsustainable. The supply side just won't hold. U.S. production will fall, and OPEC+ will step in to stop the bleeding. But in the short term, this is exactly what the Trump team wants. The goal isn't just cheap gas. It's breaking inflation and pushing foreign rivals to the negotiation table. Whether it's Russia, OPEC, or China, energy policy is now part of the broader geopolitical chess game. And here's one more thing to watch. If this really is about a structural shift, about resetting global trade and capital flows, then oil volatility is just the beginning. Trump's team has already signaled that big tariff hikes, a weaker dollar, and aggressive deregulation are coming. That mix creates both opportunities and risks. So yes, oil is crashing. And no, it's not random. It's policy. And if they play it right, the Trump administration thinks this could be the first move in a much bigger endgame. We'll keep watching the charts. But now you know what's moving the pieces behind the scenes.